evening and welcome to the Thai PBS World. During the IMF annual meetings in 2019 that I attended, I listened to the forecast by the IMF, International Monetary Fund, that the economic forecast in Thailand is 2.9%, which is the lowest among other ASEAN countries. Attended the meeting as well is Dr. Virathai Santiprapop, Bank Governor of Thailand, who are among 189 central bank governors of 189 countries, which are members of IMF. I asked him during the interview in Washington, D.C. to evaluate the economic outlook in Thailand and what should be adjustment in terms of reform for sustainable economic growth in the near future. During the International Monetary Fund annual meetings this year at the IMF headquarters in Washington, D.C., the central bank governors from 189 member countries of the IMF attended the meeting. It was the opportunity to have annual economic fiscal check-up. Dr. Virathai Santiprapop, the governor of the Bank of Thailand, attended the meeting and he shared prospects of the Thai economy and monetary policy to keep the country in good shape economically.
In the current environment where trade protectionism has created adverse impacts across basically all continents of the world, that is unavoidable. If you look at the growth rate, growth projection of the IMF this year, the GDP growth is going to be about 3%, which is the lowest since the global financial crisis. And the global trade volume, the growth is expected to be minimum close to about 1%, which is very low as compared to the past few years. So this is a condition that is not favorable to countries like Thailand. So we agree with IMF main policies recommendations that countries firstly need to think of policies mix to shoulder the current slowdown, the current global slowdown, and the policy mix will have to come from different types of policies. Okay. When we think of macroeconomic or demand management policies, the first two policies that would come to anyone's mind are fiscal policies and monetary policy. Monetary policies, most countries, including Thailand, we have been conducting very accommodative monetary policies, and that's why interest rates globally has been at historical low level. And if you look at the policy rate in Thailand, is very close to historic low. And if you look at the yield curve of bond yields in Thailand, it has also become very flat and very low. So that's the first policy. We have to ensure that monetary policies remain accommodative. But also we have to understand the limitation of monetary policy as well. The fact that interest rate has been low for long and will continue to be low for quite some time, that has also created undesirable or unintended consequences. Financial stability risk has gone up globally. If you look at the amount of bonds, of financial asset, corporate bonds and also government bonds that have been traded at a negative yield, it has gone up to exceeded 15 trillion US dollars. This is the amount of bonds that are traded with negative yields. And that has affected the structure of financial systems, ranging from the banks, insurance companies, asset management, and pension funds. Most people, we have to depend on pension on the long term. And if their pensions do not generate the return that is good enough to provide financial security for retirees, that's going to be a problem. And on top of that, we have seen a lot of new financial products, particularly in the non-banking sector, that have tried to search for yields, underpricing risks. And people, when people want to search for yield, they don't look very long term, and they don't try to fully appreciate all the risks involved. And this search for yield and this underpricing of risks could become an amplifier of shocks if the economic cycles slow down more than what people have expected. So on monetary policies, remain accommodative, but have to be very mindful of unintended consequences and limitation of monetary policy.
And cannot ignore global factors which generate uncertainties ranging from rising geopolitics, especially in the Middle East, trade war and Brexit. Dr. Virathai emphasized that monetary and fiscal policy need to be able to accommodate these risks.
I think most countries, most governors in this meeting at IMF agree that fiscal policy will have to play a more active role in stimulating economy in the current situation. But it's not all types of fiscal policy. It has to be fiscal policies that aim at improving productivity, long-term productivity of a country. And this is a way to ensure that whatever the money that the government is putting into an economy, we generate long-term benefits and medium-term benefits. But fiscal policy, we have to play a more active role. And there are a lot of areas where fiscal policies can focus on, ranging from preparing infrastructure for digital economy. And the world is becoming more and more digital, but it's undeniable that we're not that ready in many countries, including Thailand, to ensure that the digital infrastructure is there, so that the firms and also people can benefit from transition towards digital economy. So fiscal policy, we have to take the lead in the current environment when you look at the macroeconomic policy perspective or demand management policy perspective. A third type of policy, which is very crucial, and particularly at this time, policies that we call structural reform policies. And there are a lot of constraints that all countries have to deal with, ranging from low productivity, widening income inequality. The issue is about climate change. How do we deal with climate change? Structural policies will be very important to ensure that productivity can be enhanced. The last set of policies, if I may, is related to financial policies. The world will become much more volatile with all the shocks that we have to go through. So we have to ensure that our financial institutions remain strong and have large enough buffers to deal with the volatility and unexpected shocks ahead of us. So we have to make sure that we maintain good regulatory framework, macroprudential and also microprudential regulatory frameworks for our financial institutions. We have to ensure that the non-bank activities, the shadow banking activities, do not get expanded to the extent that it could create a source of fragility in the long term. So maintaining buffers for the financial system, maintaining strength of the financial system will be very key.
The governor also includes other main policy for long-term economic growth, including strength of financial institutions to absorb economic shock and fiscal policies, especially under the circumstance of rising geopolitical tension of Brexit, trade war, and rising tension in the Middle East.
We have seen a whole spectrum of shocks, ranging from the trade tension, the Brexits, bad news, then good news, and then not so good news. We have also seen heightened geopolitical tension, looking at the situations in the Middle East. And domestic politics in many countries moving toward populism, and that have also created an environment not friendly for conducting long-term policies. So shocks are out there. Okay? The way to deal with this increasingly volatile world, I think that there are twofold. One is that we have to make sure that we do not have sources of fragility within our system. If there are a lot of fragilities in our system, this fragility will become amplifier of shocks when those shocks emerge. Okay? And this in particular on financial system, if it is fragile, it could be an easier, it could lead to amplification of shocks, which we don't want to see. The other policies that we need to have when we see a lot of shocks ahead of us is to ensure that we have good enough buffer, ranging from buffer from the macro level, the size of international reserves, making sure that we don't have a lot of mismatches in the financial system. We don't borrow externally in foreign currency to use domestically. That's a currency mismatch. Making sure that our capital market don't borrow short and then long, and that's maturity mismatch. When basically you raise funds on a short-term instruments, but use that fund to do something very long-term, like buying property, developing infrastructure development projects or real estate projects. That's a maturity mismatch. When shocks emerge, there's possibility that those mismatches will amplify the shocks. So in the world full of the shocks, we have to make sure that firstly, our system remains strong. There's no fragility in the system. We have to look ahead and try to minimize those fragilities as soon as possible. And secondly, maintain good buffer. The buffers will provide immunity against all these shocks once they emerge.
In the current situation that uncertainties happen around the world, a good sign can be coming from conclusion of RCEP, Regional Comprehensive Economic Partnership. If accomplished this week in ASEAN Summit, can be considered another good sign because it can become the world's largest free trade area. And it means all eyes will be in ASEAN Summit this weekend. That's all from Thai PBS World tonight.